Hey, what's up, folks? Welcome back to the channel. I wanted to do a follow-up to the video I did a couple of days ago about my thoughts on 2022 and investing in general. And there's been a lot of interesting content popping up on YouTube, and there's been a pretty fierce debate that's raging between long-term investing versus short-term investing. And I wanted to expound more on what I actually believe. So you have, when you're analyzing an investment, a stock or even options, ETFs, or mutual funds, which I don't believe in as much, but investments in general, you have fundamental versus technical analysis. And and always have been more of a fundamental analysis kind of guy. I've said in prior videos that I don't fully subscribe to technical analysis. I see people making money with it. I have as well, but it's not as, no pun intended, fundamental as fundamental analysis. I really believe in looking at companies from a long-term stability and growth standpoint. And also, if you can, picking companies early in the cycle. Like I hear some other YouTubers talk about that, companies that start out very small, that are like small cap companies that are too risky. I don't necessarily believe that, because I do believe many of the large cap companies, which a large cap again is based on market capitalization. The larger the market capitalization, the larger the company's valuation, and the larger they're classified. So you have large cap, mid cap, and small cap. But anyway, all of those companies, even mega cap companies, once started as small cap companies. So to accelerate gains as an investor, you do want to find companies early on if you can. And small cap companies are going to struggle. But anyway, that's a bit of a digression from what I really want to discuss. Fundamental analysis, I just want to go over briefly to kind of support what I'm saying here. It really focuses on the financial statements of a company. It also considers the economic factors, macroeconomic and microeconomic, and factors such as GDP, earnings, employment, and the macroeconomic environment in general. So, and again, I pulled up some articles here to just kind of give a visual of what I'm discussing here. This Wikipedia article discusses the two methods that I mentioned, fundamental and technical analysis. And technical analysis looks at charts. Like I've made videos on candlestick charts, and I've analyzed several candlestick charts on my channel in the past. So here's a brief definition that you can easily find by Googling. Technical analysis looks at the price movement of a security and uses the data to attempt to predict future price movements. Fundamental analysis instead looks at economic and financial factors that influence a business. So think fundamentals. With technical analysis, you're analyzing charts to try to predict something. And while that can work, and some people claim that it will work so successfully so often versus not working, I'm still not fully sold on it. Even though there are times that some fundamental factor can tie in to the technical analysis change that you may see in the charting, like earnings. Like if you're doing a call option and a company consistently beats earnings and they're expecting another earnings blast, then you would see that would reflect in the chart for that day. But to me, whatever happens in the technical analysis side is always driven by something fundamental. It could be a headline. Sometimes, I mean, you have exogenous events happen, like the Rona, and you have things come up that crash a stock price that are unforeseen. But that's why fundamentals really prevail in the long run. And that's always been what I focused on as an investor. And I think that anyone that claims that technical analysis is 100% right or close to it is mistaken, because there's times that it's going to be wrong. And in some cases, especially in a bear market, there's often plenty of times that it's going to be wrong. And then you have, so buy and hold is long-term investing. Value investors focus on the value versus growth. And for the most part, I am both of these. And another thing I want to discuss too, so I've started doing short videos on my channel, and I found it's a very good way to grow. Now, when I started this channel, I started it because I truly have a passion for finance and for helping people to become more financially successful. I've never wanted to be gimmicky or, somebody that's like just being goofy or entertaining, but I do try to do funny things to get views sometimes and to grow my audience, because it's very difficult on YouTube to grow. When you start as a small channel, it's very difficult to establish that those first 1,000 subscribers, getting the watch hours and all that. It's very difficult to start from nothing. So, and finance can be a boring subject unless you're really into it like me, unless you have a passion for it. Sometimes you can talk to people and they light up when you discuss finances, but I think the majority doesn't. So you kind of have to make it entertaining, which is what I do. That's why sometimes I'll have goofy glasses on or a silly hat. I try to be funny about it and get attention. And when I do the short videos, I'm not doing it to be clickbaity or anything like that. I just sincerely want to grow this channel, because the faster I grow, the more content that I can get into. It will help me to help all of you better. And this is why comments like this from bigger channels kind of irk me. I'm going to play something here. And I usually don't do this because I don't believe in, quoting or attacking other channels to grow. I mean, it can work. I'm not disagreeing with anybody who does that. It's just not something I want to do yet, or at all, maybe. But I am going to play something here because comments like this from bigger YouTubers do kind of irk me. I heard this today.
It doesn't seem as though the top creators, like on YouTube, the more subscribers you have, usually you get the majority of the views. But imagine if YouTube were just divvied up on whoever has the most retention that day.
Yeah.
See, I disagree with that. And I look at the bigger channels that are already so successful, and many of them do videos on the millions of dollars they make on ad revenue in a year. And I'm thinking, come on, man, let some little channels grow. Let some new people come in. I mean, you started out probably from nothing. So, I mean, let other people come into this and grow as well. I don't understand why big channels want to like hog the market more or less. I mean, for me, like if I made a certain amount doing YouTube, like I would be happy. I don't need to have control over the audience or the market. I like seeing new people come in. I like seeing new channels come in. I think everybody can bring a different angle to the community discussing finances, and I think it's great. So, and I think that once someone has reached a certain level of success, it's good to maybe share that success or let other people experience some of the success too. So that's really technical and fundamental analysis is really the two things I wanted to discuss. See, this is a candlestick chart here. And this is actually another YouTube video that was embedded in here. I was trying to pull up a graphic here from Investopedia. Investopedia is a really good site too, that has a lot of good financial education and information. So to talk more about technical analysis, getting into trend lines and things like that, patterns and charts, again, I don't fully subscribe to that, even though it can work, and it has worked for me. It's not foolproof. It's not going to work 100% of the time, but long-term investing will work 100% of the time. And I also agree with something else I watched, that you don't want to just take advice from somebody, even though when I make videos, I am giving people ideas, but it's for education. I'm not telling anyone they should do this or shouldn't do this. And by the way, this is kind of funny here, a subscriber gift. So I don't need to make that disclaimer on the channel anymore. Okay, so here is, again, a candlestick chart, the bread and butter of technical analysis. And if you zoom in here, see they have like this is the flag pattern analysis. which I've studied up on, but again, I don't fully subscribe to. See, this is like, notice how the price continues in the direction of the original trend once the price breaks out of the flag. Triangles. See, you're supposed to be able to, the majority of the time, analyze these patterns and figure out what a stock is going to do. But again, my core belief is that whatever happens here is based on fundamentals and fundamental analysis. And that is so much more important than this. I mean, you can certainly do it. Can't hurt. If you're able to make money more often than not, more power to you. I just don't want to mislead anyone. I do talk about call options on here, like Amazon on Friday. They had great earnings. Their call options shot way up. That would have been maybe like a one-day thing, if that. I knew following Amazon stock, as a side note here, following Amazon stock for many years, I knew what it's been trading at over the past 6 months to a year. And when I saw that it dropped to like $2,700, I knew that it more likely than not wouldn't stay at that price. I think it lost like $600 or $700 of value during the January downturn and before then. But I was fairly certain that that stock wouldn't stay at that low level and that it was probably at a discount. So I wasn't surprised when earnings came out, even though there are those that have questioned the merits of the earnings report. I wasn't surprised that when an earnings beat, at least on paper, came out, that the call options did so well for Amazon. But those may not work for everybody. If they work for you, great. Yeah, these are more standard chart patterns that are part of the technical analysis. I wanted to go over one more thing about fundamental analysis that I saw. Again, focusing on the statements, the cash flows, financial ratios like PE ratio, EPS, things like that. You really, when you're analyzing stocks, you need to really understand those. Cash flows are the lifeblood of any business. And you need to make sure that those good fundamentals are there. And this is what Warren Buffett does too. And like I said, he also does options trading. It's funny, the stuff that comes up on Google. What's better, fundamental or technical analysis? Well, I'm telling you right now what I think is better. This is a funny question. Are they the same? No. Does Warren Buffett use technical analysis? No. Again, he's fundamentally focused, but he understands put options as a tool for a source of income and buying into a stock cheap. Let me see, there was something else I wanted to find here. Not that, not that. Let's see. Take this off. Here we go. This is what I wanted to go over. So I mentioned EPS, earnings per share, price to earnings, return on equity, price to book. Now, price to book, if you read Warren Buffett's first book that he wrote, no pun intended, because the ratio is called price to book, you're not going to find stocks anymore that have like a ratio that's that low. I think his target used to be 1. Most of them are over that, because the market, the valuations in the market, even though we've had a bit of a downturn, the valuations are so high that I think that metric may need to be revised. Beta looks at the risk. The more over 1 it is, the riskier it is, the lower it is, the less risky. And there's firm specific and then market risk, which, so you have 2 types of risk. You have risk specific to the firm, like if the firm releases a bad earnings report or they have news come out that's adverse to the firm, then that's firm specific. Market is macroeconomic factors. Price to sales ratio is very important. And then in some cases, if you're a dividend investor, dividend payout and dividend yield ratios can also be important too. Now, I do happen to like dividend stocks. I've noticed, like some other YouTubers have said, it's a very slow way to grow money. If you're looking to get out of your job, if you really have that itch to be entrepreneurial and get out of the corporate world, which I can totally relate to, um, dividend investing is not going to get you there overnight. It's going to take quite a while. But with that compounding effect, dividends will grow. You'll have a growth rate, especially if you reinvest the dividends. It enhances the compounding effect, which I have referenced in my compound interest video that I did. If you haven't checked that out, please do. Dividend reinvesting will accelerate your compounding returns. Or if you have an IRA, what's great about a Roth IRA is when you get the dividends, they come straight into the account and whatever stocks or investments you're in the account, and you don't have to pay tax on them because it's a Roth IRA. And so you can have that cash there to use to buy other stocks. If the stock that's paying you the dividends, like AT&T is a great example. AT&T pays a nice fat dividend, but the stock is a poor performer. So you may want to use that dividend to buy into other stocks that you think are going to do better, instead of just keep reinvesting it. Or you could dollar cost average if you think AT&T will recover at some point, which I don't think AT&T will go anywhere, but their stock price has been stagnant for the past several years. It was, I think back in 2016, it was at like $45 a share. I actually thought at some point it would get back to that, but they're doing a lot of crazy stuff. I mean, in 2017, they bought up, I believe, Time Warner, which owns HBO. They have, I believe, CNN, and they're starting to spin some stuff off there as well. Like I believe they just spun off Time Warner, and there's some things changing with the dividend. They're cutting the dividend, and they're actually, I think investors in AT&T are supposed to get like fractional shares for something. Let me just look up here to make sure I'm accurate. Yeah, Warner Media is the company, so they're spinning them back off. And the thing is, when a company buys other companies, like I mentioned, how cash flows are really the lifeblood of a company. When companies buy other companies, so the valuation of a company is basically the present value of the future cash flows. When a company uses their money that they have to buy other companies, what happens to that? It decreases. So it's not always a good thing, even though you think that a company, when they merge with other companies, oh, they're getting so big, it's going to be a great investment and all that. Not necessarily, because it's going to impact in the short term those future cash flows. So that's the deal with AT&T. And generally, to reflect on the video I did a couple days ago, like I said, I mean the content on here to be serious. I want to educate people. I view this as a serious channel, but I do silly stuff. Like on short videos, I like to do silly stuff and I have fun with it. I try to make finance entertaining, make finance exciting, get new audiences into it, because I want to promote financial independence. I want to promote success. I want to promote more people acquiring wealth, getting out of debt, helping people with their credit, helping them to acquire assets. That's what this channel is really all about. So it's a serious channel, but I do try to make it fun, and I do try to be fun about it. So if you enjoy that, please remember to subscribe, like, and comment. I'd really like to start getting more comments and more organic engagement on this channel. My subscriber count is growing, but I don't get a lot of comments in comparison to other channels. I do get likes on videos, which I appreciate. And a lot of my short videos are really taken off, which I will say, the thing with short videos, and that's why I was kind of irked by the comment that I heard that I played for you earlier. What I like about the short videos is that it's giving new channels the opportunity to grow faster, because I've churned out probably 25 rehearsed and prepped videos that were longer, and I didn't go that far. I've been doing this for like 5 months now, and really for the first 3 or 4 months, I didn't go very far at all. I think I acquired like 100 subscribers in that time, which was a lot of work. It's a lot of organic promotion, starting up other social media accounts, using those to leverage each other and promote. It really is a lot of work to grow on this platform. But once I started doing short videos, I started taking off faster. So I see that as a more sustainable way. So I don't enjoy hearing bigger YouTube channels saying, oh, we want to control that. We wish YouTube would allow the algorithm to only push our stuff because we're bigger and because we have a better retention rate. I say, come on, let smaller channels take off. Let new voices come in. Anyway, that's all I wanted to discuss today. Thanks for watching all the way to the end. Please remember, again, like, comment, and subscribe, and have a great rest of your day.